Hi, I'm Scott Lucas with Lucas Financial Services and Wisdom Tax Group, and today is Wisdom Wednesday. Today, I wanted to talk about how some people are just maybe a little too complacent with their funds, and they miss out on some easy opportunities and better returns. So during tax season, which I talk about this a lot, and my role as a financial advisor, but I've got a team of CPAs and tax preparers, and so we look at the tax return. Let me bring a copy of uh, of one up here. Um, when we look at the tax return, we look at a lot of different lines. And so for today's discussion, I'm going to talk about this one, line 2B, which is taxable interest. This is interest that you get from banks and savings accounts and things like that. And so based on, other things we see for the particular individual, the size amount, especially like, if we know somebody's a saver and it's a really small amount, we'll have that dialogue of, how much do you have in cash reserves? So in one particular example, the people had $92,000, they said, in their account at Huntington Bank. And they had $17 here on this line. And I'm like, $100,000, $17 of interest income. Why aren't you paying more attention to this? So I'm just going to give you some examples. But anyway, uh, tax planning, but this information comes from the tax return. That's how important it is to look at it. So I just pulled one up. This is all just done about an hour or two ago. Here's PNC. Up to $100,000, you're going to get 0.04% interest. That's $40 on $100,000. You're going to get $129 of interest on 100,000 to 250. Here is Huntington. No relationship is 0.01. With you got a purse relationship is 0.02. That's $20 on $100,000 of your money that they're using. Here's Bank of America. 0.02, 0.03, and you get the top tier, tippy top there is 0.04. That's again $40. So, the holistic financial planning is, looking at so many different angles, and this is just a real easy one. And I can't believe how many people had large sums of money in some of these banks and just thinking, hey, it's my safe money, but they could still be doing a lot more with it. Here was my favorite one. This one was with Chase. These people had $63,000 in here between their different accounts. They had 0.01%, interest paid this period 40 cents, interest paid year to date $5.09, and looky here, a $25 monthly fee. So it's costing them to leave, their money in there. People, you got to be more diligent on managing the cash reserves too. This part of it sounds a little bit like a commercial, but we custody with Charles Schwab. They have what I've seen is one of the highest yielding money market funds in the country at 5.17, 5.18. So instead of $40 on $100,000, you get over $5,000 in a money market at Charles Schwab. Anyway, if you've got any questions, give me a call, but pay attention to these things. We call these lazy dollars. Make sure they're not too lazy. Okay. Thank you, and have a great day.